Joining us right now, Mr. Vinod Aggarwal, the MD and CEO at Eicher Volvo, on the show with us today. Great to have you on the show. Just wanted to get your sense in on how genuine really is the CV recovery and whether or not the demand is here to stay. And is it anywhere close to pre-COVID levels just yet? Or would you say the recovery is still pretty much at a very nascent stage?
As you rightly said, the recovery is there, and it looks to be absolutely genuine because there are reasons for it. Just to give you a little bit of perspective on the industry, if you look at 1920, year before the COVID, the industry was down 40% if you exclude the small commercial vehicles. So we were already, CV industry already was at a very, very low level before the COVID itself. Now, after the COVID has set in, the industry had dropped further. Like, for example, if you take first 11 months, YTD basis, excluding small commercial vehicles, the drop is 42%. So therefore, this drop was quite significant. However, if you look at last 5 months, especially after October, after the festive season, we are having very good growth. If you look at Q3, which is October to December, especially the trucks, heavy-duty trucks grew by around 13%, and 5 to 15 ton grew by almost 16%. Now, if you look at the month of February, last month, we have a growth of 30% plus in heavy-duty trucks and around 60% in light and medium duty. Now, this is the growth which is absolutely much better than the pre-COVID levels. Basically, this growth level is pointing us towards the earlier peak levels of 18-19. Somewhere it is between 18-19 and 19-20. Now, why this growth is coming? You asked whether it looks to be genuine or not. This growth is coming basically fundamentally based on 2-3 factors. One very strong factor is the replacement demand. When the industry was down in 1920, it was down 40%, as I mentioned. And then on top of it, further down, it means the replacements have not happened in last 2 years. Now, these replacements have to happen because if the economic sentiments are positive, if the transporters, they are confident that the economy is going to be there and they will get demand for movement of freight, they will replace their trucks. Now that confidence level is coming back in the transporter's mind that the economy is going to do well. That is the very, very strong factor number one. Factor number two is that infrastructure investments are very strong, and government also has declared its intention very, very boldly and very clearly when they have created the fiscal space in the last budget and provided for huge expansion in capital expenditure programs. So that is the second positive factor. Third positive factor is the BS6 introduction from 1/4/2020. Now, when the BS6 trucks were introduced, it means there was a lot of modernization in the trucks. The productivity of the new trucks is better. And when the axle loads were increased maybe around 2.5 years back, that time the design of the trucks were not changed. This design of the trucks has been changed along with BS6. So therefore, the current trucks, they are properly designed to carry those loads which were increased around 2.5 years back. So therefore, it makes a lot of sense to go in for this BS6 trucks because it means more productivity. It means better lower costs. So these are the three very, very strong factors. Now, on top of it, I think alternate fuels has made a lot of progress. For example, CNG is now available more and more throughout the country. And there is a lot of migration of demand from the diesel trucks to CNG trucks, especially in the 5 to 16 ton category. So I think these are the factors which are pushing the demand, and these factors look to be sustainable. And I am very confident that next 2-3 years are going to be good for the CV industry.
That's the positive. The other thing is that there is also that looming concern about as we understand, issues at the suppliers end, component shortages, etc. And the other big factor is also the spike in commodity prices. How is it that you're balancing both the positives and the negatives at this juncture? And would you then say that, if indeed the commodity uptick continues, that at some point is going to impact your volumes or margins?
I think these are the normal factors of demand and supply, and the basic fundamental economics come into play. For example, if there is a demand for movement of goods and services, then whatever are the factors on the commodity price or on the economy, the trucks are needed, and the customers will buy trucks. If there are infrastructure projects which need trucks, the trucks will be bought. Now, of course, because of the competitive forces, there may be limitation in increasing the price. However, fundamentally, this inflation which is there in the commodity prices, this has to be passed on sooner or later. If suppose currently we are under stress, we have not been able to pass on, but I'm sure there will be price increases happening in the coming months to make this make our balance sheet or make the balance on the cost increases. So I'm sure, I think these are the factors which are always which have to be managed. And if you look at the supply chain constraints, these again currently, of course, there are severe constraints, especially in the electronic parts like ECUs or microprocessors or sensors. But these again, I would say these will get solved, because I don't think the business gets impacted on a long run basis because of the constraint in supplies. People will definitely find ways and means to manage the supply constraints. There will be constraints for maybe for another 2 or 3 months, but I am sure these will get solved.
Okay, given the current scenario with interest rates as well, Mr. Aggarwal, do you feel that now that CVs are possibly the best place to be in, given that rates continue to be low, economy is on a rise?
Rates are all-time low, and so the financing is available. But at the same time, if the transporters are not having the good balance sheets, or if they are already having very huge leveraging, to that extent, they may have the difficulties. But the good persons who are having good track record and genuine business interests, they are not getting any difficulty, and they are getting finance at low rates. In fact, the rates are as low as ranging from 7.5% to 10-12%. So I think these are all-time lows. I have never seen this type of rates in the past.
Sure. In terms of segments as well, where you feel the maximum demand traction is coming in, and of course we have been tracking the latest sales data and so forth, where is it looking encouraging? How do you see those trends shaping up now over the next couple of quarters?
If you look at the construction trucks, which are tippers, I think they are leading the entire recovery. Tippers are almost back to the normal, you can say the peak levels. They are like last month, I think the tipper sales were almost 6,500 plus. And then, of course, followed by even the haulage trucks, because now there is more and more demand for movement of steel, cement, or other core items. And the entire auto industry is also growing. So it means you have to do more production, you need to move more parts for making the production, then you need to distribute all the two-wheelers, cars, and all this production. So then you need trucks to distribute the final product. So therefore, I think it's a chain impact, and the entire demand is on the upside.
What is the point at which you would say that the increase in raw material will start hurting demand? There would be elasticity beyond which the trucker would say, look, I cannot accept the price hike because I'm not being able to take care of my cost of servicing and my cost of business. How much are we reaching there?
If you look at the past trends, even in the past also, the steel prices have gone up and come down. I'm sure this time again the prices have gone up significantly. Like we had an increase of 4.5 rupees per kilogram in the month of October. Another increase has happened in January. I would say now is the time to the prices to come down, because always the steel happens like that. There is a huge hike and then followed by the drop. So there will be, I'm expecting that the steel prices will cool down maybe in another 3 to 6 months. And I don't expect any further hike happening in the steel price. And in any case, as I mentioned earlier, these are the economic fundamentals. If there is a demand for movement of goods, then trucks are required. Then people will buy trucks. Then definitely the price increases will happen, because beyond a point, the manufacturers will not give trucks at low prices. Because all of us are there to do good business. We also have to take care of our balance sheets. So beyond a point, I think everyone will be very tough in recovering the right price.
Okay. My next immediate question is that there were a lot of supply side constraints. When I speak to car companies, when I was speaking to Ashok Leyland, they're saying, look, we are seeing a demand, but that is also because we are not producing. Have the demand issues got settled out? And now do you think the kind of demand what we've seen for CVs between October to January, or let's say from November to February, will that start plateauing out?
I would say not. I'm not saying just to that, because the demand should continue. Because as I mentioned earlier, there is still a lot of potential. I think replacements have to be very strong. Infrastructure investments are very strong. There is a lot of fundamental reason to move towards BS6 trucks. Then the scrappage policy has also been announced. More details are expected. Therefore, I don't see we will see plateauing of demand, because as it is, we are still at a very low level. If you look at the heavy duty trucks, even in the month of February, the total sale has been around 16,000. Now, if you go to the earlier peak levels of February, we had seen the months of February, maybe February 18 or February 19. The sale in February used to be around 25,000 or 24,000, 25,000. Still, we are at 16,000 heavy duty trucks, 18.5 ton and above. Similarly, if you look at 5 to 15 ton, last month the sale 5 to 15 ton was around 11,000 units. Now, these are the levels which were there earlier. We had seen even higher levels in the month of February 19. Therefore, I would say still there is a lot of potential to grow. This industry, if you look at the earlier peak levels, we are still far away from those peak levels of 18-19. 18-19, the peak level was 550,000, excluding small commercial vehicles. Now, we are still, this year, we are likely to end, excluding small commercial vehicles, maybe at around 230 or 235. So next year, against 230, 235 of this year, next year it should be maybe, because this year first half was not so good. So next year, full year should be maybe around 400,000 plus. Now, if that 400,000 plus also will be much lower than earlier, 550,000. So therefore, I would say still there is room for growth. We still have to touch the earlier peak levels. Economic fundamentals are becoming stronger and stronger.
Mr. Aggarwal, appreciate your time and thank you for joining us.